We are starting right now our Q&A session, which follows the webinar we just finished about business deductions for realtors. That webinar was recorded and available on YouTube if you are watching us in a recording and not live. So what we are going to do right now is look at the questions that came during this time and see what we can add to information that we shared on the webinar. Okay, give me 1 second. So I can go to our questions and okay, here we go. Okay, let's see. First question, okay, was about, okay, yes, let's see. Yeah, that's long formulated. Let me see how we will change that. Basically, okay, that question was talking about situation. It's a good question. I appreciate you asking that question. Is a subject of frequent confusion. It was about, well, I paid those expenses out of my personal account. Can I still deduct them? And I'm using my own words to formulate that long question. Is okay. Let's talk a little bit about that. Because what is happening right now is the question is, how do you pay for your business expenses? There is a difference between what is okay by law and what are best business practices. So let's start from the second, best business practices. Best business practice, of course, will be to have separate business account, which means is that you don't have to have, that's also frequent misunderstanding. As a realtor, you do not have to create a separate business entity. A lot of realtors believe they must create an LLC or a corporation in order to have these deductions. No, none of what we talked about requires that. You can completely have everything without a formal business entity. You might have an issue with legal protection. That's not my zone. That would be something to discuss with an attorney. I'm an accountant. But tax deduction wise, you can totally take them. So even if you don't have an entity, however, best business practice will be have two accounts at your bank. One will be for personal reasons, and another, open another checking account in your bank and assign it specifically to business purpose. Link a credit card to that account. So now what you have is two credit cards. One would be business credit card and business checking account, another personal credit card, personal checking account. So when you are paying, and that's, remember, we're talking now about not legal requirement, but best business practices. So if you do that, every time you go to a store, let's say you go to Office Depot and buying some office supplies that you need as a realtor, you need to pull out of your purse your business card and pay with it. If after that you are meeting with your client and buying your client lunch because you discussed that house that you just visited and or you're about to go show some houses, so you decided to first stop by lunch and you are being generous and paying for the lunch, you are paying with business card. But after that long hard day, if you are going to dine out with your spouse, you need to pay with a different card, with your personal card. And you stop to reward yourself and buy something nice for you at department store right now, and you are buying a new don't know what, like new decoration for your own house. That decoration will be on the personal card. Now, if the decoration is a staging item for your business card. I hope it makes sense, right? Now, the question is okay, what if I don't have that separate business account? What if everything is on my personal account? What do I do? You can still completely deduct it. What it does to you is it becomes a little more difficult when Uncle Sam knocks on your door. If you are being audited, you will have to prove that out of your entire deductions spent on that personal business card, which also doubles as business card. Now you have to go line by line and convince the IRS that you carefully separated business from personal. It makes it much more difficult to do. So I highly recommend that you start using two different accounts, two different cards for your business as a realtor, and keep things simpler, both for tax preparation time and in case IRS ever wants to audit you. Okay, so I guess we covered that one. Let's see what else we have. Okay. Okay, the next question, well, the next question actually, the next question has to deal with automobile deductions, but I hesitate. I will give you only very quick answer right now. I hesitate to bring it up now because there are a few more questions I want to get to. And this particular one, we talked about a week ago. We have an entire webinar, was 40-minute presentation and some Q&A after that. So please find that on our YouTube for more details. But basically, your question was about deducting insurance, because what you noticed, and I can bring it up here. Actually, let me do this. Let me share a screen one more time. I will show because it illustrates why this question popped up. Okay. The question was, somebody saw when I was showing the screen that right now on line 15 on Schedule C, there is a line that says insurance. And the question was, which insurance I can deduct? Like, is that where I put deduction for my car? No, it's not. So, okay, let's talk about different. So that line again, line 15 here on the tax return. Let me repeat it. That line is not for your auto insurance. So then where your insurance goes to. So there are different kinds of insurances. So which insurances you deal with? So first, health insurance. If you are paying out of pocket, if you are self-employed realtor and you're paying out of pocket, there was a special line there on Schedule C. Don't be alarmed. I talked about that during my presentation. I'll repeat it in case you forgot that. I said that deduction for health insurance will not show on Schedule C, which is normal. It will show in a different place of your tax return. And you know what? Once we're talking, while we're talking, let me show it. It's always better, I guess, to see things. So let me show where it will be. So you put here self-employed insurance 3720. It's not part of this deduction, but if you go on the front page of your tax return for 1040, I'm sorry, on line 29 you will see self-employed health insurance deduction. So yes, that deduction, guys, is not lost. You will see it. It's entered in a little bit of an unusual place. So health insurance does go as your deduction. You enter it on Schedule C when you prepare your return, but it ends up on Form 1040. So health insurance we talked about. What next was auto insurance. Auto insurance in itself is not deductible. It goes through that automobile deduction, and look at our previous webinar on that, where I explained and showed you examples how that works out. So no, please don't put it on Schedule C. That is incorrect. Next one will be life insurance. Life insurance is considered to be personal deduction by the IRS. You cannot get business deduction for that. And if you are thinking it's unfair because, yeah, you need to protect your livelihood, yes, realtor income is what feeds your family, something should happen to you, God forbid, is you need life insurance to, yes, I hear your argument, but remember in the main presentation we talked there are 4 criteria to deduct something. First one was business purpose, and my rule was, if I was not a realtor, would I have paid for that? Question is, would you have your life insurance if you were not a realtor? Probably yes, you would, right? So maybe that's one way to justify, but anyway, if you think about it, you can also justify it under rule number 4, which was not specifically excluded by the IRS. If you want to argue that it had a business purpose, you can't argue with that, I'm sorry. The IRS says, no, life insurance is not deductible as a business expense. So what it leaves you then, what kind of insurance goes there? What goes there is insurance specific for business, which will be 2 kinds of insurance that can be deducted. One would be your errors and omissions, so your professional liability insurance premiums, and also your general liability insurance, umbrella insurance that you may buy, which is not your E&O, not your errors and omissions, but your general liability insurance, those two would count. The other types of insurance will not count. Well, if you have your office, if you own an office for your real estate realtor business, then your then insurance that you pay to insure your office, that would count. Now, if you're asking about what about my home insurance because I have home office, that's a great question, but I will refer you to a webinar that we did 2 weeks ago. There was our very first webinar was about home office deduction, and I explained how that works there. There possibly will be either small percentage of your home office insurance, which will be part of the home office deduction, or it may be incorporated in the general allowance that IRS now authorizes as a simplified method for home office deduction. Okay, we have room for time for a couple more questions. Let me see what else we have. Okay. Yes. Okay, let's. Okay, fine. That's an. Yeah, thanks for asking that. That's actually a good question. Yeah, funny. I meant to mention it during presentation and forgot about that. So thank you for bringing that up. Question was about how do you choose which line to put your items on when it can qualify under multiple lines. You know, my favorite thing is, let me show the tax form right now and we'll see what we might be talking about. Okay, so I'm going to share my screen again and going to show you the tax form. And if we go on our Schedule C, where we report deduction, let's look at an example. Let's assume that we are looking at such common expenses. You just bought toner for your printer, for your documents. Where it goes? Let's see which lines we can pick. Well, I can say is, what are you printing? I'm mostly printing flyers. That's what I need my ink. Okay, you are printing flyers, then it can go on line 8, advertising. Okay, where else it can go? Okay, I go a little down, there is line that says office expense. Can you put it here under office expense? Yeah, sounds like you can. Well, there is line under supplies. Can you put it there? Sure. Then we have other expenses. You could actually go and specifically list right here and put like toner and ink for printer and put it here. Can you? Absolutely. So right now, like off of the bat, we have so 4 choices. How do you choose? Guys, the answer is it does not matter. It really does not matter as long as it makes sense. So what we're talking about is, okay, as long as the expense fits the description, the IRS will not have an issue with that. So I have a couple tips there. One tip will be, first is, there is a temptation sometimes for ease of bookkeeping, but that's a very false ease of your, it's false simplification. It does not simplify your life. There is a temptation to group everything into one number. So let's say everything I spend for business, let me put everything together, which will be my advertising supplies, my computer equipment, my electronics, all my gadgets, everything, all of that I call, why do I use it? Because, well, I run my office, there is a lot of things that's going on. I will add all of that up, call it office expense, and here is my 15,000 annual expense there on my tax return, and I will put it on my schedule as one line. Am I breaking any rules? So basically the suggestion here, and it's not my suggestion, I emphasize it, but a lot of our clients saying, see how we have all of those small numbers everywhere. Those small numbers end up being 20 grand. What stops me from just putting 20,000 here on my office expense and not putting it on all of these miscellaneous lines? Nothing really stops you. But here is why I do not recommend it. I can tell you this. If this guy, meaning the IRS auditor, ever looks at your return and decides to check you, guess what they are going to be suspicious about? It's easy to guess, guys. Big numbers. Big numbers get audited first. So if you take the same number and spread it legitimately between multiple lines, your chances of being audited go significantly down. Also, when you are audited, understand that this is what is going to happen. If the IRS looks at your realtor business schedule, I can guarantee you, question number one will be, where is your mileage log? That's the easiest. The IRS goes first after your automobile deduction. Second, after that, they are going to take the biggest number on that Schedule C, the largest, and ask you to prove that. So make your life easier. If you if you have expenses that qualify for various expenses to qualify for various different categories, spread them across the board, and that way you will have smaller numbers into more boxes. It looks much more believable to the IRS, creates less IRS risk and less IRS audit risk, and creates and makes for easier time when you should you be audited and should you have to prove these items. And on that note, we will close Q&A session because we are right now at our 1 hour mark. I greatly appreciate everybody who is subscribing to our YouTube channel, who is listening to our webinars. Reminder is next week we are skipping our webinar due to a different commitment that I have to honor. And 2 weeks from now, on March 23rd, our next webinar will be about travel and meals and entertainment deduction for realtor. Once again, I'm Michael Plux, black belt in real estate taxation. We prepare tax returns for realtors and real estate investors for 20 years, since 1996, work exclusively with real estate businesses, and will be very happy to help you. Contact our company at reitaxfirm.com, or there is a link from my website, michaelplux.com. See you on our next webinar. Have a very successful year as a realtor, make lots of money, and that way, yes, you will have some taxes to pay to the IRS, but that will be taxes that will be worth it. Much success to you. Thank you for watching the webinar. All the best. We are done. We are stopping this webinar right now. See you next time.